Okay, so let's dive right into this Otis Worldwide Q3 earnings call. And to be honest, the mood here is pretty somber.
Yeah, it's definitely not a celebratory tone.
Not at all, no.
Yeah.
We've got the transcript and the stock information in front of us, and, well, it paints a pretty clear picture. This elevator and escalator giant is facing some serious challenges.
Yeah, especially in China. We'll definitely unpack that in a bit.
Absolutely. But first, let's sort of set the scene here. The stock, it took a hit. It closed down over 3% at $98.28.
Yeah, and that drop, it's not really that surprising when you look at what we're seeing in this call. I mean, China is a massive market for Otis, and their struggles there are definitely weighing on their overall performance.
A bit more than just weighing, I'd say. I mean, new equipment orders in China, they plummeted by 20% for the quarter.
Yeah, that's
a huge chunk of their business.
It is. It is a huge chunk. And that drop, it actually pulled their global figure down to a negative 3%. So yeah, the China situation it's really front and center in this call.
Hard to ignore for sure. But here's where things get a little more interesting, I think. Despite this pretty bleak picture in China, Otis actually managed to return to top-line growth overall.
Yeah, and that's really the power of their service business model. It's a steady, recurring revenue stream that comes from things like maintenance contracts, modernization projects, repairs, all those things that keep those elevators and escalators running smoothly.
So even when people aren't buying brand new equipment, they still need someone to keep the existing ones working, right? And that's where Otis seems to really shine.
Exactly. And the numbers really reflect that. I mean, service revenue was up almost 8% in Q3, which is pretty impressive when you consider the overall economic climate we're in.
Yeah, it's a testament to the resilience of that part of their business.
Yeah.
And that 8% jump in service revenue, ultimately it drove their overall organic sales growth of about 1%.
Yeah, and organic sales growth, that's essentially a measure of how much a company is growing from its existing operations. So it excludes things like acquisitions or currency fluctuations. So that 1% growth, it's all about Otis doing what it does best.
Which is maintaining and modernizing those elevators and escalators.
Yeah.
All over the world. So yeah, there are challenges, definitely. But Otis is far from down for the count.
Yeah, they're showing they can weather some pretty serious storms.
Okay, so let's dig a little deeper into this China situation, because it's obviously a major factor here. We already touched on the 20% drop in new equipment orders, but what's the full picture?
Well, the slowdown, it's hitting Otis hard. And we're talking about a projected $500 million revenue hit this year alone.
Wow, that's a staggering number. No wonder the mood on this call is so somber.
Yeah, it's a big blow. And to make matters worse, they're also dealing with intense price pressure in China. Basically, they're facing fierce competition and a market that's become very sensitive to price.
So they're being squeezed from both sides then. Lower demand and lower prices. Sounds like they're walking a tightrope.
They are. They're trying to find that sweet spot where they can maintain, a decent volume of sales without sacrificing profitability or jeopardizing their long-term financial stability.
It's a delicate balancing act for sure. Are there any bright spots in this China story at all? Any signs of hope?
Well, there is one potential silver lining. Otis is seeing some positive signs in the modernization market in China.
Interesting. That makes sense, right? I mean, as buildings age, the need for modernization increases. I mean, older elevators, they need to be upgraded to meet safety standards, improve efficiency, keep up with modern technology.
Precisely. And this could be a key driver of future growth for Otis in China, even if the new equipment market remains sluggish.
So they're essentially betting on the fact that even if people aren't buying new elevators, they'll still invest in upgrading their existing ones.
That's the hope. And it's a strategy that could pay off if they can position themselves as the go-to provider for modernization solutions.
It'll be interesting to see how that plays out. But while we're on the topic of different markets, what's the story in the rest of the world? Is China the only trouble spot? Or are there challenges elsewhere?
Well, actually, there's some good news coming from the Americas.
Oh.
Tell me more. New equipment orders in the Americas were up by a surprising 20% in Q3.
Really?
Yeah.
That's encouraging. Could this be the start of a rebound in that market? After all, the Americas have been struggling with economic uncertainty for a while now.
It's possible, yeah. Otis seems to think so. They're citing increased customer confidence and proposal activity, which are both positive indicators.
So people are feeling more optimistic about the future and are more willing to invest in new equipment. That's a good sign.
It is. And in Europe, things are, holding steady. They're outperforming a challenging market overall. thanks to strength in the Middle East and Southern Europe.
So it sounds like there's a mixed bag of performance globally then. Some regions are showing promise, while others, like China, are facing some significant hurdles.
Yeah, that's a fair assessment. It really highlights the complex market dynamics that Otis is navigating right now.
It's not a simple story, that's for sure. So with all of this in mind, what does it mean for Otis's future? What's the big picture here?
Well, first and foremost, their service-driven model, it's proving its worth. It's providing a cushion against the new equipment slump, especially in China.
Like a safety net that's catching them as they walk that tightrope.
Exactly. And, as we discussed, they're banking on a modernization boom, particularly in China, to fuel future growth.
Right. That aging infrastructure could turn into a significant opportunity if they play their cards right.
And to adapt to the changing market, Otis is taking steps to streamline its cost structure, particularly in China.
So they're not just sitting back and hoping for the best. They're taking proactive measures to position themselves for the long haul.
That's right. They're making strategic moves to ensure they can weather the storm and emerge stronger on the other side.
It's a bold strategy, trying to navigate the challenges in China, while capitalizing on the global shift towards modernization. It'll be fascinating to see how it all unfolds.
Definitely a company worth keeping an eye on. There's a lot at stake for Otis in the coming quarters.
Absolutely.
Yeah.
And I'm sure their investors are watching very closely to see how they execute on this strategy.
Yeah, high stakes for sure.
It really is. And speaking of strategy, the earnings call transcript, it actually delved into some pretty interesting details about how Otis is managing costs, especially in China. It's not just about riding out this current storm. They're talking about making their operations more efficient for the long term.
Right, and that's a crucial point, especially given the pressure they're facing right now. They talked about taking a hard look at their operational footprint in China, consolidating things, streamlining their processes.
So it's sort of like tightening their belt, making sure they're not overspending.
Exactly. They've already, for example, moved their modernization operations into their new equipment factories, which means some of their existing facilities are being repurposed, or potentially even closed. They're really adjusting their capacity to align with the current market reality.
It's like downsizing your home when the kids move out. You don't need all that space anymore. It just costs more to maintain.
Yeah, very apt analogy. And this downsizing, it also extends to their workforce in China.
Ah, yeah. That's always a sensitive topic. It's one thing to close factories, but it's quite another to let people go.
Absolutely. It's a tough decision, and one that no company takes lightly, of course. But Otis's management, they seem to be taking a very pragmatic approach.
Yeah.
They emphasize that they're not going to chase volume at the expense of profitability.
So they're not just trying to sell as many elevators as possible, regardless of the price. They want to make sure each project is financially viable.
That's a key point, yeah. They're prioritizing smart business decisions. That will ultimately strengthen their position in the long run, even if it means making some difficult choices in the short term.
Like pruning a tree, right? You have to cut back some branches to allow the healthy ones to thrive.
Exactly. And this focus on efficiency and profitability, it's not just about cutting costs. It's also about optimizing their operations to be more customer-centric.
So making sure they're delivering a great experience for their customers, even in a challenging market like this.
Precisely. And this customer-centric approach, it's evident in their Uplift program, which is all about driving efficiency and improving the customer experience.
So it's a multifaceted strategy then, aimed at making them leaner, more agile, and more responsive to market demands.
That's it. And it's not just limited to China either, this drive for efficiency. It's a global initiative for Otis.
Makes sense. A global company needs a cohesive strategy, even if they tailor their tactics to specific regions.
Absolutely. Now, let's shift our focus a bit here to another key takeaway from this earnings call. The modernization market. Remember how we talked about it as a potential bright spot in China?
Oh, yeah. The idea that even if people aren't buying new elevators, they might still invest in upgrading their existing ones.
Exactly. And Otis is making a big bet on this trend. Judy Marks, their CEO, she actually pointed out that the price of a modernized unit is roughly the same as a new unit, but the margins on modernization are significantly higher.
Wow, so they make more profit from modernizing an old elevator than from selling a brand new one. That's pretty compelling. Makes sense why they're so focused on this segment.
It's a strategic move, yeah. It leverages their existing expertise and relationships. I mean, after all, they're already servicing many of these older elevators, so they're in a prime position to offer modernization solutions.
It's a natural progression. And this modernization market, especially in China, it's huge. You're talking about a potential market of 10 million units in China alone.
Yeah, which dwarfs their current new equipment market. It's a massive opportunity if they can capitalize on it.
Like finding a whole new gold mine
Mm.
right in their backyard. But the big question is, can they actually execute on this strategy? Can they turn this potential into actual results?
Well, their service portfolio growth, it suggests they're on the right track. They've maintained impressive growth in their service business for 8 straight quarters now, which is a clear indication of their ability to capture and retain service contracts.
So they're not just good at winning new customers, they're also good at keeping the ones they have.
Exactly. And that's a crucial foundation for their modernization strategy. I mean, who better to modernize an elevator
Yeah,
than the company that's been maintaining it for years?
it's a relationship built on trust and expertise.
Yeah.
And Otis is actively working to maximize that advantage. They're focusing on improving retention rates and conversion rates, basically making sure they keep their existing customers happy and converting those service contracts into modernization projects.
Smart play, yeah. They're leveraging their strengths and building a pipeline for future growth.
So, while the new equipment market might be sluggish, particularly in China, the modernization wave could be their ticket to sustained growth.
That's their bet. And it's certainly a plausible one. It's all about adapting to the changing market and finding new ways to thrive.
Classic example of a company adjusting its sails to navigate some pretty choppy waters. And they're doing it while staying true to their core strength, their service-driven business model.
Yeah, that service business, it's their anchor, providing stability and resilience in a turbulent market.
Like having a strong foundation to build upon, no matter what storms might come their way.
Yeah, it's a great example of how a strong core business can really help a company navigate uncertainty.
Absolutely.
Yeah.
But, while we've spent a lot of time talking about China's impact on Otis's financials, it's crucial to remember that they're a global company.
Right, their performance in other regions,
Yeah.
it plays a huge role in their overall health. Exactly. In this earnings call, it gave us some valuable insights into how they see things shaping up next year.
Well, let's break it down then, starting with their bread and butter, the service business.
Okay, so the good news there is that they expect that service business to continue its strong performance in 2025, projecting mid-single-digit or better top-line growth.
So steady, consistent growth, which seems to be their mantra these days.
Yeah, it aligns perfectly with their long-term outlook. And perhaps even more importantly, they anticipate continued margin expansion in the service segment.
Okay, so for those of us who aren't financial wizards, what does margin expansion really mean?
Sure, so it essentially means they're expecting to become even more profitable within their service business. So, they'll be making more money for every dollar of service revenue they generate.
So it's not just about growing revenue, it's about growing profitability as well.
Exactly. Now, they did acknowledge that the rate of margin expansion might slow slightly compared to this year's, stellar performance.
Which makes sense, I guess.
Yeah.
They've been exceeding expectations on service margins throughout 2024.
Right. It's hard to keep up that pace indefinitely. But even with a slight slowdown, they're still expecting healthy service margins in 2025.
So the service side of the business, it seems to be in pretty good shape. But what about new equipment? That's where things get a bit trickier, right? Especially when we factor in China.
Absolutely. China remains a bit of a wild card.
Yeah. They're projecting a decline in the Chinese new equipment market next year, but the extent of that decline, it's still unclear.
Yeah, it really hinges on the effectiveness of the government's stimulus measures, which at this point are still a big unknown.
So there's a lot of wait and see when it comes to China. But what about the rest of the world? Are they feeling more optimistic about new equipment sales outside of China?
They are, yeah. They anticipate low single-digit growth or better in new equipment sales for the rest of the world.
Okay, that's promising. What's driving that optimism?
Yeah. Well, their current backlog, it's showing some positive signs, which suggests a healthy pipeline of potential new equipment sales.
So even though China is weighing on their overall new equipment outlook, they see potential for growth in other regions.
Yeah, it's a balanced perspective, acknowledging the challenges, but also highlighting areas of opportunity.
What I appreciate about this management team is that they're not sugarcoating the situation, but they're also not hitting the panic button.
Right, they're facing the headwinds head on and making strategic adjustments to navigate through them.
And they're focused on cost management, modernization, and their core service business. It gives them a solid foundation to build upon.
They're playing the long game for sure, positioning themselves for success. in a rapidly changing market.
Well, there you have it. A deep dive into Otis Worldwide's Q3 2024 earnings call. It was a mixed bag of results, with both challenges and opportunities on the horizon.
Yeah, a good reminder that, investing is rarely a straight line. It's about understanding the complexities of a company's strategy and the dynamics of the market they operate in.
And hopefully, this deep dive has given you some valuable insights into Otis's current situation and their plans for the future.
Remember, knowledge is power, especially in the world of investing. So keep learning, keep questioning, and keep looking for those hidden gems of insight.
And that's a wrap on this episode. We'll be back soon with another deep dive into the world of earnings calls. Until then, happy investing, everyone.